Get ready to embark on a thrilling financial adventure that can transform your future. The art of investing. If you're new to the intriguing world of investing and are wondering how to take those initial steps, you're in the perfect place. In this video, we're about to unveil an indispensable roadmap that consists of 10 fundamental stages for novice investors. By the time you finish watching, you'll possess the wisdom and assurance to launch your investment voyage. Make sure you watch Stage 10 because it's important in the wealth journey. Let's plunge right into this exhilarating journey. Stage 1. Unveil your investment vehicles. Picture this as the grand opening act of your financial drama. Your choice here can be a game changer. Each investment vehicle carries its own distinct traits and risk-reward ratios. If you crave growth and can handle some turbulence, consider the thrilling world of stocks, promising high returns albeit with their fair share of drama. Bonds, on the other hand, are the steady, reliable actors in this story, providing a consistent income stream. Mutual funds, the all-star ensemble managed by pros, offer diversification without the hassle of hand-picking stocks. Real estate investments, including rental properties and real estate investment trusts, REITs, promise both income and long-term appreciation. The key is to sync your selections with your financial aspirations and your appetite for risk. Take your time with this choice. It lays the bedrock for your investment strategy. Stage 2. Commence with modesty. Think small but think now. You don't need a king's ransom to embark on this journey. In fact, starting small is a savvy move, especially for beginners. It's the gentle toe dip into the vast ocean of investing, ensuring you're not exposed to excessive risk. Set up automated contributions from your income source. This practice, known as paying yourself first, guarantees a regular investment. As your confidence and financial standing grow, so can your contributions. The magic of compounding means that even minor, consistent investments can balloon significantly over time. So, don't wait for a windfall. Begin small, maintain discipline, and witness your investments flourish. Stage 3. Delve into investment research. Here's the heart of your investment odyssey. Prior to committing your hard-earned money, conduct a thorough analysis of potential investments. Start by peering into their past performances. Look for a history of consistent growth and stability. Next, gaze into their future prospects, scrutinizing market trends, competition, and economic conditions. Any upcoming catalysts or lurking risks. Dive into expert analyses, consult financial experts, and participate in online investment communities. Remember, knowledge is your shield against hasty decisions. Armed with in-depth research, you'll make informed choices that align perfectly with your financial aspirations and risk tolerance. Stage 4. Grasp the world of fees and costs. Venture into the world of fees and costs tied to your investments. These may seem like trivial details, but they can greatly affect your overall returns. Several costs require your attention. Costs such as 1. Brokerage fees. These are charges for trading via broker. Look for platforms with competitive fees or commission-free options. 2. Expense ratios. Mutual funds and ETFs have annual management fees. Lower ratios can save you money in the long run. 3. Transaction costs. Certain investments carry extra costs like bid-ask spreads for stocks or upfront fees for specific funds. 4. Taxes. Be alert to tax implications, as capital gains and dividends might be taxable. Opt for investments that balance returns and fees. Minimizing costs can significantly magnify your gains over time. Stage 5. Embrace dollar cost averaging. Welcome the strategy of dollar cost averaging into your arsenal. This brilliant tactic suits both newcomers and seasoned investors. Instead of attempting to time the market, invest a fixed sum at regular intervals, like monthly or quarterly. This approach boasts several perks. Firstly, it eliminates the need to predict market highs and lows, cutting down on risk. Secondly, it allows you to purchase more shares when prices are low and fewer when they are high, effectively averaging your cost per share over time. By investing consistently, irrespective of market gyrations, you harness the market's long-term upward trajectory while mitigating short-term volatility. It's a disciplined approach that can lead to steady and potentially substantial wealth accumulation. Stage 6. Conquer emotional investing. Master the art of emotional discipline when investing. Emotions like fear and greed can be kryptonite to your investment success. During market turbulence, fear might trigger rash selling to avoid losses. Conversely, during euphoric phases, greed may lure you towards speculative, high-risk assets. The trick is to adhere to your well-thought-out plan, one that aligns with your goals and risk tolerance, regardless of market tumult. Avoid impulsive reactions to daily news or fleeting market swings. Successful investing is a marathon, and emotional decisions can steer you off course. By staying resolute and level-headed, you'll be better poised to achieve your financial objectives. Stage 7. Reinvest dividends and returns. Harness the magic of compounding by reinvesting dividends and returns. This often overlooked strategy can dramatically enhance your investment returns over time. Instead of pocketing dividends or capital gains, plow them back into your portfolio. This approach enables you to acquire more shares or units, increasing your ownership stake. Over the long haul, this leads to exponential growth as your investments generate additional dividends and gains, which are, in turn, reinvested. Compounding operates like a snowball, with your money working for you, accelerating your wealth. Initially inconspicuous, over years or decades, reinvestment's impact can be remarkable. It's a simple yet potent strategy, especially when combined with regular contributions to your investment portfolio. Stage 8. Yearly review and adapt. The path to successful investing isn't a single choice. It's a lifelong expedition. Regularly evaluating and adapting your investment strategy is essential to ensuring your portfolio aligns with your shifting financial goals and market dynamics. Establish an annual ritual to scrutinize your investments. Verify if your portfolio's diversity aligns with your risk tolerance. Evaluate if your objectives have changed, perhaps you're nearing retirement or have fresh financial aspirations. Also, gauge the performance of your investments. Are some consistently underperforming? Are new opportunities emerging in the market? Don't shy away from making changes when necessary, whether that means rebalancing your portfolio or altering your asset allocation. Keep in mind that the financial landscape evolves, and so should your investment strategy. By remaining proactive and adaptable, you enhance your odds of long-term investment success. Stage 9. Embrace patience. Welcome patience as your steadfast ally on this investment journey. Understand that investing is no sprint to quick riches. It's a marathon. Short-term fluctuations are typical and frequently caused by sentiment, economic events, or speculation. During tumultuous periods, it's easy to succumb to fear or impulsiveness. Yet, the most triumphant investors stand resolute. They acknowledge that markets have historically trended upward over the long run. Consider this. Many of the wealthiest investors achieved their success by holding steady through market downturns, granting their investments ample time to prosper. By releasing the power of compounding, patience can smooth out the kinks brought about by market volatility. Stay fixated on your long-term financial goals, undeterred by the inevitable ebbs and flows. Remain patient and disciplined, and you'll be better poised to reap the rewards of your investment efforts. Stage 10. Educate yourself. Never underestimate the might of self-education in the realm of investing. Knowledge is your ultimate weapon in this arena. Your journey as an investor starts with a firm grasp of the basics, followed by a continual expansion of your financial knowledge. Begin by immersing yourself in foundational investment literature. Authors such as Warren Buffett, Benjamin Graham, and Peter Lynch offer invaluable insights. Explore online courses and attend seminars to grasp diverse investment strategies, risk management tactics, and financial planning. Staying abreast of financial news and market trends is paramount. Follow reputable sources and platforms that deliver accurate and timely information. Being well-informed empowers you to make sound decisions while bolstering your confidence as an investor. Remember, as the investment landscape evolves, so should your learning. Dedicate yourself to expanding your knowledge, and you'll be superbly equipped to navigate the intricate world of financial markets.